the recording as well. That is also important. So let's start. So let me just summarize what we have discussed in our last session, means yesterday. So we have covered the what is corporate action, right? Am I right, guys? Did you try? Anyone try to uh, explain the different corporate actions? Anyone? As an assignment, I give the assignment. Anyways, so we have covered the what is corporate action, or what are corporate actions, you can say. Then types of CA, right? Apart from that, we have also covered the life cycle of corporate action. Life cycle of corporate action, corporate actions. And today that we'll discuss, or we'll be covering about the top, you can say 10 to 15 at least, corporate actions, corporate actions, corporate actions. We'll cover this segment today. So before I start to this session, I would like to ask you guys any question in previous session. Anyone means who was there. Anyone. If you have any questions, please let me know about what is corporate action types or life cycle of corporate action. So I'll quickly explain and then I'll jump on the corporate action, different corporate action types.
Shivraj, is it possible to explain life cycle in a briefly, if possible?
Corporate action life cycle, it means how a corporate action events generates or start from, right? So your corporate action starts from the issuers. Issue, it means who announce the
Mhm.
corporate action, right?
Mhm.
For example, let's say TCS. TCS announced the dividend. So that becomes issuer who announced the corporate action.
Okay.
Then next, it becomes registrar. So registrar who maintain the records of issuer, means shareholders record of issuer. Let's say TCS
Correct.
has a 1,000 shareholders. So
Mhm.
registrar will maintain the information of 1,000 TCS registrar in the books. So that will easy for TCS to get the information of shareholders. So accordingly, they can prepare the corporate action events and distribute benefits.
Mhm.
Then after registrar, there would be custodians. Modern custodians, they process the corporate actions. Why? Because so custodians, they hold the information of securities, right? So they know, it means who are the holders of securities, how many securities that they're holding. So they carry all information about the demand holders or security holders. So they process the corporate actions as well. So custodian can process the corporate actions for agents, or maybe brokers or prime brokers, right? Also they can directly directly, means custodians can process corporate actions for funds as well, right? If not for funds, then here you might see prime brokers, they'll process corporate actions for retail investors and even funds. It means hedge funds, mutual funds and all. So this is becomes your cycle. It means upstream teams, or upstream, it means the first participants who announce the corporate action. And here you would see end, so it means downstream participant, like retail
Okay.
investor who receive actual benefit of corporate action. So this cycle, we'll call it as a corporate action life cycle.
Okay. Okay.
And apart from that, there are other means this is a participant cycle. Apart from that, there is one more cycle. So yesterday I just missed it. So I wanted to quickly walk you through that as well. So you may definitely expect question on it. So this becomes your participants life cycle, where so that each and every corporate action goes through this particular stages. But if you ask me the technical, technical or from a processing perspective, processing life cycle, processing life cycle of corporate action units. So each and every corporate action goes through. First of all, you should have a position or holding in your account. So it means you can say trade booking or desk. In a corporate action, we'll call it as a desk booking or position as a security details. In short, security details. You should have to have this. If you don't have it, then you don't need to book the corporate action or process the corporate action. If you have it, then ultimately, then you would see, then announcement will come in place. So where issuer announce the corporate action, announcement of sale, post announcement. So you would see teamwork create the corporate action, event, you can say scrubbing, event scrubbing or corporate action scrubbing. Scrubbing means what exactly? Announcement, it means to refer MT564 or maybe CREST, which is a information provider, right? Refer that information. MT564, apart from UK, means most of the countries they use the Swift platform, right? And CREST basically for UK countries. So where the CREST provides financial information to the financial participants, I would say, who are the participants like broker, custodians, agent banks, and many more. So they receive the information through CREST, right? Announcement details and all. And event scrubbing, it means to refer the same sources, MT564 and even CREST. And for that matter, also you can cross verify the information with BBG, Bloomberg, Exchange, and validate it. So in short, scrubbing, it means you can say it's a validation stage of data. So validate the corporate action information, right? Validate the processing information. So once you validate the information, of course, the next stage would be to create or creation of corporate actions. Creation of corporate actions. So it means you will have to create or set up, you can say, set up, set up CA in system, set up CA in system. To creation of corporate actions in the internal accounting system or record keeping system, or you can say payment system. they will have to set up it so which you can pay. So that stage come into picture. If you're not able to understand, that's fine. If you're not looking for a corporate action interview, and if even if you don't understand this life cycle, that's fine, because this program is purely dedicated for fund accounting. But again, corporate action is an integral part, so I wanted to give you insight on corporate action as well. So as I already we discussed about why corporate action is important in fund accounting. But this process flow you would see from a corporate action perspective, because corporate action is one of the critical vertical that you would see that comes under the asset servicing. So where prime brokers and custodians, they actually create the corporate action events and process it to the different stakeholders. Right? Then another would be, means after the creation of a corporate actions, there would be another one, that is your let's say, let me this way. After the creation, we'll have to, means processing the payment. So you can say payment processing, not payment processing. So if it is a mandatory, then you can say payment processing, but I will say instructions, instructions setup. I mean, once the creation of event in the system, then you will have to set up the instructions for cash, stock, right? So for a different accounts, let's say H1, private equity, or whatever accounts that you would see, or whichever, that you need to set up their payouts in the internal accounting system. So it means this process, you can say it's simple, it's a accrual setup process, right? Accrual setup process. Accrual setup process. Once you set up the accrual, once you set up the accrual, if it is a voluntary events, if it is a voluntary events, then again uh, you might see deadline, deadline task as well, deadline, or I would say election management, election management, right? Election management, election management. It means this is for a voluntary events. So voluntary events, we carry the deadline. If I talk about buyback, tender, then any other voluntary events, so all voluntary events they carry the deadline, and they also schedule a voting as well. Voting, it means shareholders, if they are interested, they participate. If they are not interested, then they don't participate. So that process will call it as a uh, deadline or election management process, right? And then finally, your payment team come into picture. Payment processing. Payment processing. So when we say payment processing, so here all three types of events, mandatory, mandatory with choice, and voluntary. So we'll have to process payment with the all three corporate actions. And your final stage would be risk and claim. final. So if you're not claim, it means for failed trades, we'll have to set up payment or process payment manually. So that task we'll call it as a payment processing. So you need to set up or process the claims manually. So this is becomes your corporate action processing life cycle. Each and every event goes through this life cycle only. Each and every means each and every. There is no any other alternative. There are a number of key things, but as I said, from a fund accounting perspective, for us, the validation of event is important, not the cycle. But FYI, if you see any opportunity as such in future for a corporate action, and if someone asks question on this, hey, do you know about processing life cycle of dividend? If they ask question on this, what is the life cycle of dividend? Then you should explain in this way. So dividend, right distributions for that matter, let's say tender or any action, if you see that each and every action goes through this cycle only. Are you getting me, guys? Note it down this quickly. Take a 1 minute time. Note it down this in your notebook and let me know you once you're done with the note making. Don't rely on only recording. I'll record it, but sometime due to technical issues, you might see the recorded the session is not been recorded. So note it down. Then I'll jump on different actions.
Hello, Shivraj sir.
Yeah, go ahead.
Sir, if possible, can you one session can take on BBG, Bloomberg? How can we use that one?
Yeah, I have two screens. I'll show you how you can check the information on BBZ.
Sure, Shivraj.
And I'll send you the shortcut keys to go through it.
Sure, sir. Thank you.
Okay, so you're done with this, guys. Can you go ahead? I've sent you the keys.
I'm done.
Go and check it. Ticker symbol, main ID, top, and all right.
Sure. Thank you.
I would again request, please note it down each and everything because even if you check this information on Google, hardly you could find the blogs and all. And as I said, don't rely on only recordings. Try to note it down. And for a trade booking and all, you can say it's a trade processing part. Trade processing. Because if you don't hold the securities, then you don't need to process any actions. Simple. Trade processing in internal system. Trade processing in trade system. Okay. So I'll take you ahead. So as I said, so we'll discuss top 10 to 15 corporate actions. So where you may expect questions or regularly that you will have to deal with corporate actions and all. So okay. So if I talk about, let's say, mandatory corporate actions, what are the different mandatory corporate actions? Can anyone tell me this? What are the different mandatory actions? Come on, guys. What are or which are the mandatory corporate actions? Okay. So don't you like to answer, or you're not interested? Are you guys interested in training, or just you want a job? That's what you're sitting here.
Uh, Stock dividend, stock splits.
Stock split, stock dividend, right?
Yep, dividend and
Okay. Okay.
name change.
Name change. So let's start with let's say IPO. I'll explain each and every actions in a unique way. So you try to note it down, and you can refer the same, or you can follow the same approach if you like it. Okay. Let's say there is a company, so which is let's say GMT Private Limited. GMT Private Limited. Okay. So GMT Private Limited, now I'll consider that company as A, because if I write GMT every time, that increase that writing time, so I don't want to do it. Okay. So GMT means A. We have already discussed about what is corporate action. I don't want to discuss that same again. Okay. So now I'll explain what are the different actions, right? And after this session, so it means in next week, we'll see how all these corporate actions create impact on net assets value of a fund, and then adjustment of corporate actions if you see any differences as such. So don't miss any sessions, I would say. Okay. Let's say GMT Limited. So we'll consider as A. If 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 a company want to raise fund, if a company want to raise fund, right, through a company's securities or shares from common public, a company see the intention to raise funds, right, to raise funds from common people through shares, so that events will call it as an IPO, right? A company a company if raise funds through common, or let's say from public through common, sorry, uh, from common public through shares or securities, right? So that event, that company will call it as a IPO, initial public offering. So initial public offering, so it means after that what will change? First of all, is it a mandatory or voluntary? It's a voluntary. Nobody forced to you to enter in this corporate action. From a shareholder's perspective, it becomes voluntary action, and from a company's perspective, it becomes mandatory because they want to raise the capital through, let's say, equity dilution, right? Here, if you ask me, sir, what will be the impact on net assets value of a fund of this, IPO event, I would say no impact. But that depends on the situation, listing situation. If you see the listing price is higher than the issue price, so it means that particular, let's say, fund enter in this XYZ fund, XYZ IPO. IPO issue price is 100 and IPO listing price is, let's say, listing price is 150. So it means there would be positive change on NAV by 50 rupees. So this is how you can relate, right? So once you enter in IPO, the price was, means you purchase the securities at 100 and you sold the securities at 150. So there is a gain of 50. So that gain you can treat as a income. And when the income increases, ultimately that will also affect on the NAV. So net assets value of a fund will increase. What if, sir, issue price is 100 and listing price is 50? So it means there is a loss of 50. So that will affect on NAV and your net assets value will reduce by 50. So that's what I said, depends on the listing situation. If there is no gain and loss post listing, then there would be neutral impact on net assets value of a fund, right? And this is what you can say IPO event, it's a voluntary event. Nobody force you to participate in the any of the IPO events. And if company want to raise this funds through this from common public through securities dilution, so that becomes your IPO event. Again, what will change, sir, from if I let's say now I got the idea from investment perspective. So that depends on the listing price. If there is a change, then there will have a change on net assets value of a fund as well. But again, from a company perspective, what will change? Here, if you see A private limited, right? A private limited. But post IP event, it will become public limited. A limited, not public, but it's a limited. A limited. Private word will uh, eliminate it by the stock exchange. So you, SEBI regulator. So your new name would be E limited. Instead private limited, it would be E limited. All right. So A limited. Okay. Any question in IPO now, guys? Any question?
So my point is here, if there is no difference in the IPO issue price and the uh, on the listing price, do we still go and write these transactions,
If there is
Suraj,
no
in
change,
the books of yeah, there is no change in the prices of the IPO issue price and the listing price. Still, we will go and write the transaction in the books of account, in the books of a
yes,
fund.
listing price is nothing but it's a current market price for you, and IPO issue price is nothing but your book
Book
price.
price, yeah.
So you will have to record it, no matter what.
Okay.
Okay.
So which price we consider? We while writing the first initial issue price. So we will be considering the book price, and at the end, like listing, at the time of listing, we will write it as a market price. Am I right here?
At the time of, let's say, when you participate in issue, so you can
Mm-hmm.
consider the issue price. And at the time of, let's say, listing, once the security list, then you can consider the listing price. Listing, it means market price, what you
Market
have.
price. Yeah, yeah,
Yes.
yeah. Got it. Yeah. Okay.
All right. Okay. I'll take you ahead now.
I I have one small doubt
Yeah,
again.
yeah,
Sorry.
go ahead, go ahead. Don't worry.
So, yeah. So here IPO issue price, okay, when we are participating, we know that cash is going out from us and we are opting for the this thing shares while participating in the IPO.
Hmm.
Okay, that I know that like we can write a transaction because it is and while listing we don't have like we don't pay anything, right? What is the journal entry for? Can you tell me the both the journal entries, please?
Journal
I'm
entries, once you participate, it's a buy for you, right?
yes.
But you don't need to buy anything as such until you get the securities in your pocket. So you can create the payable. So it means when you participate in the that IPO event, once you participate in the IPO, so you need to
Mm-hmm.
create a payable, create a payable, payable, create a payable. Like let's say the amount is, I'm assuming it's 100 for one security, and let's say that one security is in only one lot. It's just a hypothetical situation.
Yes. Yeah.
Then you
Yeah.
can create a your, let's say, security purchase account debit, payable account, create a payable, hold to get the allocation in your demat account. Once you get the allocation in your demat account, so that becomes your uh, payable
Yeah.
account debit, cash account credit,
Okay.
and on allocation date. Okay.
Yes, sir.
And this is on application date.
Yeah. Application date. Okay.
So there are other ways as well to record this. So instead of creating purchase and sales payable, so they consider like application money payable, right? Because we are
Yeah. Yeah.
applying to it. So they use wording like application money account credit, security
Okay.
purchase account debit to uh, that application money account credit. So it means we have just applied to it. And
Okay.
then
Okay.
application money payable account debit to cash. So it meant application money will out. So in this way, just add the word application.
Okay. Okay.
All right. So when the security listed, let's assume it the price which is 100, and you got the allocation price also with 100.
Yes.
No change it. But on listing date, listing date, you checked it, there is a change in price, right? Current market price is 150. So now you
Yeah.
have to record the security again in a books of account. That doesn't make any sense, right? So you just need to worry
Correct.
about the 150 price and the issue price or listing price. Let's say issue price. It was 100, current market price which is 150. There is a gain of 50. So that becomes
Correct.
investment gain account or investment account, whatever it is, investment account debit to unrealized or realized, depends on your situation, to unrealized gain account credit. This is how you can record your accounting entries in the books of fund.
Okay. Just give me a minute. Investment account. What was that credit item? To
To unrealized gain account credit.
unrealized gain account. Okay. Okay. So, so on this point, I just want one clarification, Shuraj. Thanks for this. And so, whenever we have a transactions, or sorry, whenever we have purchased the securities at the end of every period, that is at the end of every accounting period, we are going to write this investment account data to unrealized gain or loss account for any securities. Is my statement correct or not,
Yes,
Shuraj?
yes. Accounting
Okay.
date, yes. On accounting date, we always measure the value of a securities. So we have a
Okay.
separate dedicated session on pricing.
Mhm,
So we
mhm,
will
mhm.
amaze. I'll give you the rules, tips, background. What are the different parameters? How we check the price of securities, valuation gain, and everything. Don't worry about it.
Yeah, thank you. Thank you so much. Yeah,
Okay.
yeah,
So, so now we are done with this, right? So your silence, I'll take it as
yeah.
a you don't have any
Yes, yes,
question. Okay.
yes. Yeah.
Okay. Thank you. So I'll take you ahead with the, let's say, another example, another type of corporate action. Let's say again, a company, A means GMT Academy, don't forget it. Now GMT Academy, GMT, now it's become a limited, right? It's not a private limited. So I'll take it as a A. If a company, let's say, earn profit, right? A company has total number of shareholders, let's say 100, and that company earn the profit of 1000. If that company distribute this profit 1000, if that company distribute that distribute profit amongst all shareholders, so that event becomes your dividend distribution. So that event would be dividend distribution. There is no name change, there is nothing as such, there is nothing restructuring as such. It is plain and simple. If company earned, let's say 1000 rupees, and company has a number of shareholders of 100, then company will distribute profit, means 1000 divided by 100. So whatever the share price should be, let's say 10 rupees per shares. So that 10 rupees dividend will receive to the shareholders. So that distribution or profit sharing event, you will call it as a dividend distribution event for you, right? Dividend distribution event for you. Profit will receive to the shareholders. Here, sometime you may expect question like, what is EPS, earning per shares? It's like a NAV, net assets value. 1000 means profit divided by number of shares, which is 10 rupees for per shares. So this becomes your earning for per shares. And for us, so what is important for us? X date and record date, already we have discussed it. On X date, as an accountant, we process the accounting entry in the books of account as a dividend receivable. Let's say we are holding one shares, so you can process the accounting entry for one shares receivable receivable account debit to dividend income account. To dividend income account credit 10 10. And on payment date means when actually you receive payment. On payment date you can just reverse the receivables, cash account debit to receivable account credit. Receivable account credit. All right, please note down this quickly. Have you noted, guys? Shall we move ahead?
I'm done, Suraj.
Okay, thank you. So this was your second event, which is dividend distribution. Okay. Then third, again, same company, GMT Limited. So I'll take it as a A. If A company, understand this, A company earn profit of 1000 or generated profit of 1000, if that company request to request shareholders holders to reinvest the dividend in the same company, means the board of a company or board of directors or board members, board of a limited, so they'll request, right, they'll request to the shareholders, means this 100 shareholders, to reinvest the dividend to reinvest the dividend in same company stocks, so that events become the DREAP, dividend reinvestment plan. So company will send a notification to the all 100 shareholders. Company will notify them and request, see guys, we are going to distribute 10 rupees as a dividend. If you want, what you can do, you can repurchase the shares of let's say A Limited or GMT Limited from the market, or else what I'll do means what company will do, company will create a shares and distribute to them instead of profit. Why company will do this? Again, if you have a question, simple. If company want to utilize this profit for expansion, or maybe to mitigate the liquidity issues or crunch, if company has any plan in place, so they can come up with the DREAP, so where company will distribute the shares to the let's say holders of or holders of securities, and company will again utilize that profit for their business activities and functions, so that events become the DREAP. It means dividend reinvestment plan. Note it down. dividend reinvestment plan. Dividend reinvestment plan. So what if, again, question would be, what if companies send notification to the all 100 shareholders? Out of 100 shareholders, 50 agreed with reinvestment and 50 denied it. Will they receive any people or shareholders who, let's say, denied that particular event? Will they receive any benefits? Yes, of course. They will receive cash. If they don't want to continue with the drip, then they'll receive cash. Even if you deny the drip, that's fine. And people like who have agreed with reinvestment, they will receive stock. Payout is important. If you don't know the payout of a drip, then you cannot process that event. Any question in drip? And if you ask me what would be the accounting entry of a drip, if you receive cash, cash to dividend income, same entry, payable, receivable that you can create. For a stock payment, you don't need to create any accounting entry for this particular stock. But yes, your demat account that will be updated, and you can treat this as an investment once you received this stock value. Check the stock value, how much amount that you have received, and then you can consider that as a stock. It's a retention benefit, stock retention benefit, so that you have received, right? So you can create an investment. So it means that company will process benefit to you. So let's say stock dividend that you can treat you as a stock dividend that you have received, but always that security price is we calculate in amount. So calculate the price of securities in amount, and then you can record that amount. For example, let's say this particular stock price is 10. So that becomes the investment for you then, right? That becomes investment for you for XYZ securities that you have received that particular securities. Correct? So now just guess what would be the accounting entry in case of stock that you receive. Come on.
Purchase of stock account, data to cash.
So actually, here if you see, uh, there are two aspects. One, once you receive cash, right? Once you receive here not data, so it's all about, let's say you will receive stock, right? Once you receive stock, how we process the accounting entry once we receive stock received? If I ask you, let's say you have received stock, how will you record this accounting entry?
So purchase of stocks, data to the cash account. If we are paying cash, anyhow it is going out. Yeah.
Mhm.
In general,
In general, can you repeat this one?
purchase of stock account, data to the cash account.
Okay, then what will change here then in this context?
In this context, I think dividend instead of cash, anyhow it is not coming, it is not going from our this thing. So I think it will be dividend income. That is purchase stock account data to the dividend income account. Am I right?
It's not your income now. So
Huh,
you're
okay.
going, yeah, it will add in your investment. Think from that perspective. Think it. Account.
To capital account?
In the books of company always transfer the means transfer or receive securities to the capital account. So they can do it. But from a fund accounting perspective, we cannot do it. I mean, as a fund manager, we cannot do it, right? Okay. So from a journal entry perspective, what would be the journal entry? See this. So you want to receive the stock dividend. So you can treat that as a stock dividend, whatever quantities that you have received. Sorry. So stock dividend, let's say stock dividend, account debit. Here you can apply the personal account rule. Why personal account? Who gave the dividend to you? Who gave the limit? Who gave the dividend?
Company, a company.
Yes, to company A account credit. Check the price of the dividend. Let's say stock dividend is 10. 10. This is how you can prepare the accounting entries. So always see how you can apply the logic. If you don't know how to apply it, then you won't be able to prepare it. And for a corporate action, see, to be honest, you don't need to prepare any accounting entry, so don't get confused again. Only your demat account that will update. You need to reconcile it, and if you see any change, then that change you need to adjust post and pre corporate action. So physically, you don't need to apply the accounting entries to the corporate action events. We don't we don't apply the accounting entries treatment to the corporate actions. Till dividend income, that is fine. Post
Okay.
that, you don't need to apply the accounting entries. You don't prepare it.
Oh, okay.
Yep.
Then why they will ask in every like most of the cases in the interviews?
They don't ask for a corporate actions. Where means in which interview that you have let's say seen they have asked accounting entry and stock split. You tell me.
It's been long time. I haven't. To be frank, it's been long time. I have attended the interview, but in the interview I have attended, they did ask me regarding the stock split on the bonuses.
They'll ask it. My question is accounting entries. Did they ask you on stock split accounting entry? Bonus issue still that is fine. So bonus
Acha.
issue, whatever that bonus you have received, it's a benefit. So that company is processed to you so that you can record it. Right. So you
Okay.
see this bonus issue, stock dividends, that will update it in your demat account. Custodian will update your demat account and send it to you. Broker will update your demat account and send it to you.
Okay. Okay. Yeah. Got it. Yeah.
But definitely they'll ask accounting entries on a stock, cash dividend,
Yes, sir. Yep.
dividend
Yep.
payable, dividend receivable, interest payment. They'll ask accounting entries, not on stock split. They'll ask question on stock split in a different way. How stock split will create impact on net assets value of a fund.
Yeah. Yeah. Correct.
In that
Yep.
context, they definitely they'll raise question,
Mhm.
but not from a something. Even and I'm sure even if they ask question and ask, you can again question to them. So can you please tell me the accounting entry, how you can record it?
Okay. Okay. Yeah.
You can prepare accounting entries for anything, but the one with the one condition. The condition is you will have to convert that value into monetary consent. Then only you can prepare the accounting entry.
Yeah. Yeah.
For us, you can create, and then there should be inflow and outflow as well. What if there is no outflow, there is no inflow? That becomes difficult to prepare the accounting entries. But That stock you can treat as an inventory, right? And inventory, it means it will in and out always, think from the other side as well. When we say inventory, it means it will in and out. Bonus issues, it will in. Let's say stock split, old securities will out, old stocks will out, new stocks will in. Like that. So inventory,
Okay.
right? But if you want to prepare accounting entries, you can, right?
Yeah, sure.
Okay. So again, another example.
Suraj, you were telling that like we need to reconcile these things from the brokerage account, right? I mean,
Broker,
demat account.
broker and custodian, both see, broker and custodian both maintain the data.
Mm-hmm.
Go and download the statement and cross verify it. It should match, or it should, the value of the investment, it should match.
Mm-hmm. Okay. Okay.
If not, then that, due to the corporate action, the discrepancy been created, and then you need to check that why there is a discrepancy and find out, and accordingly try to resolve it out,
Sure.
right? Then third corporate action, if I take again GMT Limited, which is A company generated profit of 1000. Same example will carry forward. Number of shares are, let's say, 100. That company gave a choice. Company gave a choice to the holder of a securities to opt for cash and stock benefits. There is an advanced version of cash and stock. Sorry, dividend reinvestment plan. It seems like similar, but it's not the same, right? So no one will ask from a fund accounting perspective. Hardly you would expect question on cash and stock. But yes, again, this is also one of the corporate action. This is a mandatory with choice corporate action. It's mandatory with choice corporate actions, right? And here, let's assume it company want to distribute 10 rupees dividend for each securities. So in cash and stock option, let's say 75 holders, they want stock dividend. So here's just, look for a statement. In the first DRIP event, company was requesting to the holders to reinvest in the same company. But here, company is asking to choice, means choose it, what benefit that you want, whether it is a stock dividend or whether it is a cash dividend. And let's say 25 holders, they confirm they want cash. So they'll receive, or sometime you can ask for a 50% cash and 50% stock. So that depends on your investment strategy, what you want, how you want, what benefit you want. So you decide it. So you will receive that portion. So that events become the CSO, cash and stock option for you. sometime you may expect if the interviewer, let's say, has immense of exposure from this industry, so he might, or he or she might ask question like, what is the difference between a DREAP and CSO, cash and stock option? See, if you technically, if you ask me, there is no difference, right? And
Yeah.
from technical perspective, processing perspective, there is no difference. Anyways, right? If the shareholders choose or you request, that's the only statement. But if you see in both the cases, we are going to pay cash or either stock. But if you ask me from a legal perspective or maybe from a corporate action, that theoretical perspective, if you ask me, when in a previous event or that corporate action, the board were requesting to the shareholders to participate in DREAP event or reinvest in the same company. And in this particular corporate action, the statement has been changed. Statement has been changed, and now this particular CSO corporate action or company will, here if you see, company will provide you choice, not request. The statement has been changed. In the first brief, we have seen the where shareholder that board will request to the shareholders, and in this case, if you see, uh, board will give a choice to the shareholders to choose the benefit, whether cash or stock, whatever or whichever benefit that you want, you can choose. So company will process it, right? So it's just a matter of statement. All right.
Yeah.
Okay. We are done with mandatory with choice. So just give me a moment. Another event. So are you able to understand, guys, whatever events that we're discussing? Yes, no.
Yes, Shivraj.
Okay. Then same company, let's say GMT Limited. I'll treat that company as A. So A company limited, same company stocks, let's say, right, with the face value 10. Current situation is face value 10. So this company, same A limited company, decided to split the A company's shares, right? A company decided to split. There is no change in company name, there is nothing as such, but yes, they have decided to split. A company decided to split the number of shares, right? Why they have decided, again, why company will split shares? There are few generic reasons, but I don't believe on this. Let's say if I take the example of MRF, that stock price reached to the 1 lakh,
1 lakh. Yeah.
1 lakh 12K,
Yes. Yes.
right? And of course, retail investor like us, whose earning is less, we won't be able to afford this particular stock, right? And if company want the retail investor participation in such a stocks, then company can announce stock split. So you can say in again uh, capital market, or maybe in a stock market language, you can say it's a liquidity. High price, it will uh,
Less.
it will difficult to liquidate that particular stock, right? So it means if company is looking for a liquidity, affordability, affordability and supply, of shares in the market, then company come up with the split corporate action. But if you see same logic, this doesn't apply to the MRF. They don't even think about it, liquidity and all. They don't want retail investor participation in their company. They don't want it, right? So why? So again, question would be like, why? So that they don't want it. So see, that's their story. Why they don't want it and all. That's what I said. There a few generic reasons you would see, like liquidity, affordability, and supply. So there would be other few reasons as well. So where they don't want it, liquidity, affordability, and even supply. Vice versa. What is the purpose of generic that you should know? Liquidity, affordability, and supply. But this will not apply uh, in all the cases. Okay. So now, so post corporate action, what will happen? So let's say face value of a shares is 10 and company decided to split the stocks by 1 is to 10, means for one security you will receive 10 shares. Sorry, my bad. 10 is to 1, it should like this. So for one shares, means for one shares you will receive 10 new shares. So that's how company can come up with the stock split event. And the stock split event, here if you see stock split, it's a mandate corporate action. Mandate corporate action. So how it looks like? So let's take the example. You have 100 shares, means pre and post. So you will have to do the analysis. Pre corporate action, pre pre corporate actions, and post corporate actions. Post corporate actions, pre and post. All right. So pre corporate action, we had 100 securities. correct? Let's say market price with 20 and face value, let's say 100 securities into 10. This is the market price and this is your face value price. All right. If you check the market cap, that becomes 2000, right? Yes, no.
Yes.
Market cap, which is 2000, and as per face value, so it means book value, that becomes 1000. Corporate action announced and see what happened. So post corporate action, you will have to evaluate it what happened exactly. So if you see 100 shares, 100 shares, the ratio is 1 is to 10. So it means for a 10 security, for one securities, you will receive 10 new shares. So
10.
becomes 10. It means total securities would be
1000.
1000. So once the security increases, ultimately, so how you can calculate the market price of shares? So you know the cap, market cap. So 2000 divided by 1000 shares. What would be the price?
2.
Hmm? 20, not 20 or 2,
2. 2 rupee.
right? 2. So this is becomes your market price, new market price. And what about the face value? 100 into 10, 1000 securities, and you have market, okay, sorry, book value, which is 1000 divided by 1000 shares, that becomes 1, which is book value, new book value. Post it means this is the old case and new. Now, if you ask me, so what has been really changed? If you see face value of a shares has been changed 10 to 1. Market value of a shares 20 to 2 has been changed. Number of shares from 100 to 1000, it has been changed. But sir, what about valuation? Now calculate the valuation. Calculate the valuation 1000 shares into 2. That becomes again 2000 market value. Market capitalization or market price or capitalization. See this 2000 pre corporate action, it was 2000. Post corporate action, it is 2000. There is no change in it. There is no change in it. All right.
Yep.
So if I take the example of for this one also, book value 1000 shares into 1, that become 1000. Again, there is no change in book value as well. Now I'll ask question to you guys. If there is no change in book value, if there is no change in market value, not I'm talking about price. Again, let me clarify my statement. I'm talking about market price, not market capitalization, right? Not price, right? If there is no change in investment market capitalization, then now you tell me why there will be change in the net assets value of a fund. This question to everyone. Take a moment. Now you tell me, will there any change in the net assets value of a fund for per unit?
No.
Guys, apart from you, Sridhar, any other?
No, Sridhar. No, Suraj. There is no change on the NAV.
No change, right?
Yes.
Okay, thank you. So note down this example quickly. Pre-corporate, and you will have to perform the same. Means you will have to evaluate the pre-corporate action and post-corporate action for each and every action. And that's how you can check the impact. If there is a change, means post-corporate action, if you see any change in it, then definitely there will be change in the NAV as well. So quickly note it down this one, this example. Okay, you're done with this, right?
Yes.
Okay. What about then reverse split? This was the example of stock split. Then what about reverse split? Reverse split. Same example in a reverse way. Reverse.
Split.
Same example. Let's say company has pre corporate action. Company has 1,000 shares at 2 rupees market price. Market cap is 2,000 as market cap, and book value book value. Let's say stock split ratio is 10 is to 1. Sorry, 1 is to 10. Vice versa. 1 is to 10. So it means for 10 securities, company will pay to 1 new shares to you. So company decided they reverse the market price, means high market price, low market price to the highest, and even to reduce the number of shares in the company. Again, question would be like, why company want to reduce the number of shares? See, as I see, I'll tell you. If you ask me, genuine answer, if you want, from my side, companies just want to make you full to keep you engaged in such activities. So you'll get feel like companies doing something for you, but there is no addition, like value addition in terms of value, appreciation, and gain in investment portfolio. So that doesn't make sense for the investor. Even if you announce corporate action, stock split, blah blah, this and that, that doesn't make any sense. But we are into this industry, so again, it's a part of our profession, so we cannot say this, right? So company now in this case, company has an intention, different intention. Let's say they want to the liquidity is excessive. That's what there is no appreciation in price, right? So company want to reduce the number of shares from the market. Reverse strategy. For example, if you ask me, 3 something, there is a company, or 3ID something. So the price was around 10. So price was in the bracket like 10 to 15 only. They wanted to boost the price of securities to the above 100. And that's what they come up with the different plan, and they decided to reverse the securities. And when they come up with the reverse, so it means post corporate action, what will change? Say this. Post corporate action. Post corporate action. So now the ratio would be 10 is to 1. It means, so we will have only 100 shares post corporate action. Why? Because for 1 shares, you will receive 10 new shares. Right? 1 is to 10 is to 1. For a 10 new, you will have a 1 old security. Sorry, for 1 old securities, you will get, sorry, my bad. Sorry. For a 10 securities, you will receive new 1 security. Right? That's the ratio. If you divide, means to this quantity, if you divide by 10, you will get 100. So new securities will be, total securities will be 100. So 100 into, now 100 divided by, if you just divide with this, to this amount, total shares divided to this, see this. So it becomes, it, okay, will come at 20. So 20 would be the new market price for this particular security. Check the market cap, 100 into 20, that becomes 2000. So there is no change in market cap in reverse stock split also. Same for this as well. 1000 becomes your 100, and 100 divided by, if you divide this, 100 securities divided by price, so that becomes again 10. So 100 into 10 would be your 1000. So 1000, it means it's a book value. Again, there is no change in book value. So now you tell me, due to the even reverse split also, there is no change in net assets value, means investment value. So ultimately, there won't be any impact on net assets value of a fund as well. Key analysis from the reverse stock perspective, that is market cap, again remain same, book value remain same, but the quantity that will change, number of shares will change. The book value of a security, means face value of a security, that will change, and even market value also, that will change. That's it. That's how you need to perform the reverse stock split to understand the impact of corporate actions on net asset value of a fund. All right. So I'm done with the 5 corporate action events, 3 mandate, 5 or 4, IPO 1, and then other. So rest part we'll discuss in our next session. All right. So you can unmute and now ask your questions. I'm done with the
Sure.
split as well. Yeah, go ahead.
Yes, sure. Why the company will go for the reverse stock split? Means what is the reason?
So as I told, so if, let's say if the stock supply is very high in the market, right, and the price is not, let's say, getting appreciated due to XYZ reason, then company will reduce the number of shares, means reduce the supply, excess supply. So that will help stock prices to increase in the market. That's why company will announce the reverse split. So it means eventually if you reduce the number of shares, then that will affect on the price. Reduce the supply and increase the price. It's a basic economic, demand and supply. Are you convinced with this, or do you want more explanation?
Yes. Apart from this, anything else?
See, only as I said, only it's just matter of price. If the price is not appreciated, that's what company want to reduce the number of shares from the market. That's the whole motto is. Otherwise, why company will reduce the number of shares? There is no point because there
Because
is
in this case, the shares will reduce and the price will increase. Suppose any security which is trading at 2 rupees, and they do the corporate action, then suppose if after the post corporate action, the security will trading at 10 rupees. So
hmm,
what is the difference?
what is the difference between market price increase? That's what market price that share market price won't see company want to increase. That's what I said. Do the key analysis. Quantity change. It means so before this it was a supply of 1,000 securities in market. Post corporate action you have only 100. So you would see company will try to create a scarcity of that securities in the market, and that will lead to the high prices. So it means everyone will look for a buy, but there is no seller in the market due to the again low
Okay.
supply, and then market price will boost. So it means for a long run it will have a benefit, not for a short term. Vice versa, if there is no liquidity, then company will again come up with the stock split. But if there is a very high liquidity, exactly you can apply the opposite logic to the reverse split. In a stock split, company will look for a liquidity, retail investors participation, and then company again want the high supply of securities in the market. But here with the reverse split, company want low supply, high price, and want to create a scarcity of their stocks in the market, so that help company
Okay.
to grow their stock prices.
What type of question we can expect on this five corporate action in the interview?
One is exit and recorded already that I have explained attend my video, right?
Yes, yes.
That's the key aspect. Second is on a stock split and reverse split, you may expect comparative questions. Why company announced stock split and reverse split? And as I told, liquidity, supply, demand, price. That's it. You need to explain that around it. Third, you may
Okay.
expect question on if company announced stock split, then would be there any change on net assets value of a fund or not? You should say no, no, there won't be any change because company just restructuring it's a internal secure, it's a internal restructure, right? It's not something that we are splitting the net assets value of a fund, the units and all. No, it's just an internal structure in the stock prices of a company, not the fund units. So you may expect question on that front as well. So sometime use argue argument on this particular point.
Okay. Okay. After the means after the dividend announcement from the company, is there any impact on the share prices?
Post dividend means is there any impact on net assets value?
No, no, not the NAV. It's on the share prices, market price.
Ultimately, I'll tell you the secret. When the income goes up, your NAV will goes up, right?
Okay.
If the income goes
Mm-hmm.
down, NAV will go down. If expenses goes up, means high, then NAV will go down. So now you relate. Whether it is income, then it will go up. But there is a slight change in terms of dividend. So I'll cover that. Means don't worry about it. So in chart, I'll show you how it will reflect and all. Because dividend is an
Okay.
adjustable factor. When you adjust the dividend amount, that work in a different way. But the thumb rule is income and expenses. If the income goes high, then
The price will go down.
yes, NAV will go up.
And, okay. Now. Okay. Thanks.
Yep. Okay, then, if you don't have any questions, I'll take a leave for today. So we'll see you next week. We'll complete the corporate action because corporate action is a lengthy topic. So please be there. Otherwise, every topic is for only up an hour. Within that, we can finish it out. But this one, it's a lengthy portion. There are thousands of things that we can discuss.